So, what does a naval standoff in the Middle East actually have to do with, like, the cost of running ChatGPT?
Yeah, usually, absolute nothing.
Right, nothing at all. But, we've compiled your sources for this morning's deep dive, and we're looking at this massive chain reaction. It starts with a single blocked port, it ripples through the bond market, and then it ends with a $1 trillion panic in Silicon Valley.
It really is a wild domino effect.
It really is. So today we are taking your August 18th, 2026, 6 a.m. news brief from the Daily Tech Reader, and we're just completely dismantling it. Okay, let's unpack this.
Let's do it.
But before we look at the vulnerabilities in your global supply chain, I just want to make a quick procedural note. Your briefing today covers some pretty intense geopolitical maneuvering.
Definitely.
We're talking moves by the Trump administration, Iranian military posturing, international trade policies, and we are breaking down the realities on the ground purely based on the facts provided in your sources.
Right, just the raw data.
Exactly. There is zero political spin here, right wing or left wing. It's just a clear read on the landscape so you can understand the actual mechanics at play.
And, the mechanics are where the real story lives. You can't navigate a market this complex if you're just, glancing at headlines. Every single event in your brief is applying physical or financial torque to something else.
So let's start with the catalyst that is applying torque to the entire globe right now, which is the Strait of Hormuz.
Oh, yeah, the choke point.
Right. So the 60-day temporary ceasefire between the U.S. and Iran has officially expired, and the diplomatic window for a broader agreement has essentially just slammed shut.
And the immediate result of that breakdown is a rapid physical tightening of the region. The Pentagon has moved way beyond just warnings at this point.
They're actually blocking ports, right?
Exactly. The U.S. is now maintaining an active blockade of Iranian ports by aggressively rotating their naval forces through those waters. And Iran is, they're countering by threatening a fully offensive military posture in the strait.
Oh, wow.
Yeah, they're signaling they could launch precise attacks within weeks to violently break the American blockade.
It is an absolute powder keg. And President Trump confirmed his administration sent a direct message to the Iranian Revolutionary Guard commander, Ahmad Vahidi, warning of severe economic consequences.
Right.
And Trump has also publicly threatened military action against Oman if the Omani government interferes with American plans for reopening the strait on U.S. terms.
Which is huge because, the geography of the Strait of Hormuz is what gives all these threats such immense gravity.
Right, it's so narrow.
Exactly. It's a vital artery. And when military vessels congest that space, the sheer volume of global energy that gets trapped behind them, it just alters the math for nearly every nation on Earth.
It's like the global economy's windpipe, when it gets squeezed, the whole world gasps for air.
That's a great way to put it.
So what does this all actually mean for the everyday consumer or a business owner?
Well, if we connect this to the bigger picture, this isn't just some distant military conflict. It is a direct, immediate catalyst for higher oil and gasoline prices.
Which we're already seeing, right? To put that in perspective, Brent crude oil just hit $91.76 a barrel, which is its highest point since late July, and West Texas Intermediate climbed to $85.55.
Yeah, the markets are definitely reacting.
But the numbers only tell part of the story, honestly. Saudi Arabia has resumed some...
Yeah, in the open ocean. Then customer vessels have to physically pull up alongside them in the waves, connect these massive industrial hoses, and pump the oil over the open water.
That sounds incredibly slow and heavily uninsured and just dangerous.
It is highly inefficient, and the bottleneck is just severe. Because of this blockade environment, combined with the ongoing Houthi missile attacks in the Red Sea, Saudi exports to Asia have just cratered.
How bad is the drop?
Well, they typically send about 4 million barrels a day to Asian markets. Right now, that number has plunged to roughly 670,000 barrels a day.
From 4 million to under 700,000 barrels a day. That is catastrophic for global logistics.
It really is.
And a supply shock like that doesn't just mean gas prices creep up for commuters. I mean, a 20% spike in energy costs 3 months before a November midterm election fundamentally shifts how aggressively the current administration can negotiate.
Absolutely. The price of oil dictates political leverage, and it dictates the cost of survival for businesses. Because higher energy costs act like a hidden tax on the entire supply chain. Manufacturing a microchip takes immense electricity. Putting it on a container ship takes diesel.
So everything goes up.
Exactly.
Okay.
When the price of oil surges, inflation threatens to become deeply entrenched in the economy.
Which triggers an entirely new crisis, because from the cost of oil, we have to pivot directly to the cost of money. When inflation threatens to stick around, central banks hit the panic button to cool the economy down.
They raise interest rates.
Right, they raise rates, and suddenly the cost of borrowing money absolutely skyrockets.
And the bond markets are reflecting that panic vividly today. Global markets are weakening as these rising oil prices tighten financial conditions across the board. The 30-year U.S. Treasury yield just surged to a nearly 20-year high of roughly 5.326%.
Wow.
Yeah, and Japan's 10-year yield hit a 30-year high, so capital is suddenly incredibly expensive.
Right, for anyone tracking global capital, it's not an isolated American phenomenon. You see the immediate fallout in the massive industrial bellwethers in Asia. South Korea's Kyoto TI index and Japan's Nikkei 225 both fell, and even U.S. S&P 500 futures are declining.
Because the cost of money changes the rules of the game, particularly for sectors built on massive future promises, like tech.
Which brings us to the AI reality check.
Exactly. The European Central Bank has issued a stark warning that excessive optimism about artificial intelligence could produce a major correction in American technology stocks. Investors are suddenly shifting focus from the sheer cost of AI infrastructure to demanding actual lasting returns.
But wait, let me push back on this ECB doom and gloom narrative for a second.
Sure.
When I look through the earnings reports in your brief, I see a contradiction. Didn't Microsoft and Amazon just post incredibly strong earnings? Isn't cloud computing still growing rapidly? Where is the crisis?
So you're right, they did post strong earnings, but you're looking at the top 1% of the market. Microsoft and Amazon are the landlords of the AI ecosystem. They have cash.
Right, they're insulated.
Exactly. But if you look at the smaller startups renting that server space and trying to build the infrastructure, the math is starting to look terrifying.
Why is the math so different for them?
Because big technology companies have accumulated an astonishing $1.09 trillion in future data center lease commitments.
Over $1 trillion.
Over $1 trillion. So if you are a smaller AI infrastructure company, you're depending heavily on debt to finance your piece of that massive expansion. When long-term bond yields spike to multi-decade highs, the interest on that debt becomes unmanageable almost overnight.
So investors who were throwing blank checks at AI startups last year are suddenly looking at 5.3% treasury yields and demanding a reality check.
Right. Executives are no longer throwing money blindly at AI. They are requiring AI programs to actually demonstrate measurable revenue growth or concrete cost reductions before they authorize another round of funding. We're looking at forced consolidation.
Because the smaller players simply won't survive the operating costs in a high-interest environment.
Precisely.
So a naval blockade in Hormuz drives up the cost of oil, which drives up inflation, which forces bond yields to spike, which then chokes out the capital flow to a massive sector of the American tech industry.
The financial squeeze is brutal. But, AI companies are also being hit by a geopolitical squeeze that mirrors the exact tensions we're seeing in the Middle East.
Here's where it gets really interesting. Washington isn't just fighting an economic battle. They're forcing a global ultimatum. The U.S. is preparing to force partner countries to choose between American and Chinese AI frameworks.
A literal line in the sand.
Yeah. If a nation joins China's competing technological framework, Washington is preparing to exclude them from the American AI coalition entirely.
We are witnessing the intentional fracturing of the global technology market. National rules governing microchips, large language models, platforms, data residency, they're all drawing hard borders across the digital world.
It's the creation of an AI splinter net. Think about the early days of the railroad, where different countries built their tracks at completely different widths.
Right, you couldn't just drive a train from Paris to Moscow.
Exactly. And Apple is experiencing this reality right now. To comply with local regulatory and commercial requirements, Apple is having to train a completely separate internal AI model specifically for China. They are essentially building a second train.
And building a second train doubles your development costs. You need distinct engineering teams, distinct compliance officers, distinct server architecture. At the exact moment it costs more to borrow money to fund AI development, companies are being forced by geopolitics to build massively redundant systems.
And China is actively weaponizing this fractured market. The Chinese AI company DeepSeek is deploying incredibly aggressive tactics to squeeze Western providers. They're slashing their commercial inference prices.
Inference is a critical term here.
Yeah.
Training an AI model costs billions up front, but inference is the day-to-day cost of actually running the model every time a user types in a prompt.
Right, the ongoing operational cost.
Exactly. By driving those inference prices down to near zero, DeepSeek is intentionally starving American and European AI providers of the daily revenue they desperately need to pay off those trillion-dollar data center leases.
Man, that is ruthless. But, building redundant systems across different geopolitical regions doesn't just double the financial cost, it doubles the physical footprint.
Oh, absolutely.
We are talking about pouring millions of tons of concrete, laying thousands of miles of copper, and demanding gigawatts of electricity. And as we saw in Hawaii this week, that physical infrastructure is sitting on incredibly fragile ground.
The physical resilience of our power grid is fast becoming the defining bottleneck for this entire digital future. I mean, Hurricane Lala's impact on Hawaii is a stark demonstration of this vulnerability.
It's devastating. Over 180,000 utility customers lost power completely amid widespread flooding and severe wind damage.
And the scientific mechanics behind the destruction in Hawaii are fascinating and terrifying. Researchers are noting that Hawaii's steep volcanic terrain, combined with hardened lava surfaces, actually acted like a natural water slide.
Wow, so the water just moved faster.
Yeah, it massively accelerated the storm runoff and completely overwhelmed the drainage systems.
And when the physical grid collapses in an environment like that, the human health crises cascade instantly. Local health officials had to issue urgent warnings that the floodwaters were contaminated with raw sewage and industrial chemicals.
Right, it becomes an immediate survival situation for anyone depending on powered medical equipment or even just refrigeration for insulin.
And the secondary dangers spike immediately, too. Hospitals had to prepare for carbon monoxide poisoning from people improperly running generators indoors to keep their medical equipment online. And, this physical strain isn't isolated to Hawaii.
No, not at all.
Globally, a 7.7 magnitude earthquake in Indonesia just killed at least 51 people. And over in Europe, firefighters are battling severe wildfires with 2 deaths already reported near Athens.
The physical world is reacting violently to the changing climate at the exact moment our technological ambitions demand an unprecedented level of physical stability.
Which raises a big question for me. We've just established that AI data centers are draining the grid and demanding vast amounts of electricity. But in the middle of a disaster like Hurricane Lala, how is tech actually stepping up to help? Or is it just a liability?
What's fascinating here is how the technology sector is pivoting to become the emergency backbone when our terrestrial networks are wiped out.
Okay, how so?
Well, in Hawaii, when underground fiber optics flooded and local cell towers were destroyed, satellite communications became the sole lifeline for critical emergency operations.
Oh, which completely explains the explosion in valuation for commercial space infrastructure. The brief notes that Alphabet's early investment in SpaceX is now estimated to be worth approximately $94 billion.
Exactly. When the ground fails, the sky is the only backup we have. Space infrastructure combined with artificial intelligence is revolutionizing disaster response.
Like in Indonesia, right?
Yeah, emergency teams in Indonesia are using highly detailed Earth observation satellites to map out the exact locations of communities isolated by landslides. Weather researchers are feeding vast data sets into automated AI sky surveys to identify atmospheric events before they make landfall.
So out of these physical disasters, the actual blueprint of how we build cities is going to change. The outages in Hawaii are expected to spur massive new investments in decentralized infrastructure, like microgrids, energy storage, and underground infrastructure.
And the capital is already lining up for that reality. The rebuild over the next decade is going to have to prioritize survival over pure efficiency.
It has to, because our reliance on electricity is only going to hit new record highs.
Okay, we have covered some incredibly heavy ground today. Let's take a deep breath and do a rapid-fire check on the rest of your briefing. A quick cultural update to clear the palate.
A shift in focus is a good idea. First up, in the courts. The Supreme Court officially rejected Trump's attempt to overturn the $5 million civil judgment awarded to E. Jean Carroll. And in the financial sector, World Liberty Financial just secured a bank charter.
Which is significant. World Liberty Financial is a Trump-backed cryptocurrency company, and securing a federal bank charter is a massive regulatory hurdle cleared.
Right. Moving to sports, former baseball pitcher Tommy John passed away at 83.
An incredible athlete, but his enduring legacy will always be the revolutionary elbow ligament surgery that bears his name.
It saved so many careers. And finally, opening statements have officially begun in the murder trial of the man accused of killing rapper Tupac Shakur.
In 1996.
1996. We are sitting here in 2026 analyzing how artificial intelligence is splitting the global internet, and we are just now having opening statements for a murder that happened 30 years ago.
It highlights the extreme contrast in how different systems operate. Algorithmic pricing wars happen in milliseconds, but the legal system measures progress in decades.
That is so true. All right, let's thread the needle on everything we've uncovered in your briefing today. We started with the mission of cutting through the noise, and the through line is undeniable. A breakdown in diplomacy in the Middle East leads to a naval blockade in the Strait of Hormuz.
And that blockade chokes off millions of barrels of oil, sending energy prices surging, which fuels inflation.
To fight that inflation, central banks raise rates, driving bond yields to multi-decade highs.
And that massive cost of borrowing money puts an existential squeeze on AI infrastructure startups, right as investors start demanding real returns.
And while capital gets tight, geopolitical tensions force the tech world to fracture into an AI splinternet, all while extreme weather exposes the terrifying fragility of the physical power grids this entire digital future relies on.
Understanding the causality between these events is the difference between just reading headlines and actually being well-informed.
It is all one continuous mechanism.
This raises an important question, though, something for you to mull over as you plan your week. We established that the world is fracturing into an AI splinternet, where American and Chinese AI models are trained on completely different national frameworks and values.
Right.
So how will these distinct national AIs negotiate with each other or manage shared global crises in the future, like international shipping or climate responses?
Wow, that is a wildly complex problem.
When you have two completely siloed AI systems that were programmed from birth to see the world differently, how do they find common ground?
If human diplomats can't even agree on the facts in the Strait of Hormuz today, it is a chilling thought to imagine what happens when the machines advising them don't even share the same baseline reality. Thank you so much for joining us for today's deep dive. We hope you walk away seeing the invisible strings connecting the world just a little bit clearer.
Keep questioning the mechanics behind the headlines.
We'll catch you on the next deep dive. Remember to keep an eye on the windpipe.